Welcome back. The run in gold continuing today. Gold prices hit a record high in trading earlier today after climbing $4 an ounce. Take a look at the chart there at 1,044 and change. For the year, gold is up 18%, but legendary commodities investor Jim Rogers says he's holding off on adding any more to his position right now. With his take on the run in gold and other commodities, Jim Rogers joins us right now, chairman of Rogers Holding. Jim, always great to have you on the program.
I am delighted.
Back from Singapore, traveling around. How are things in Asia these days?
Terrific. They're much better than in the West, that's for sure. They've got a lot of assets.
A lot of assets, and increasingly your call on resources has been just so to a T. Now so many other investors around the world are looking for resource-rich areas to put their money. Tell me first about gold. You wouldn't add to your position right now. Do you want to sell at these levels?
No. Gold is going to go much higher over the next decade or so. I'm not selling any gold. I wouldn't buy. I don't like to buy anything at an all-time high. But don't sell your gold. It's going to be much higher in 10 years.
Where are the needs? I think the last time you made it was a joke, halfway joke, really. You said all those people driving those Mercedes better go get rid of the Mercedes and get in a tractor because that's really where the growth is, agriculture. Do you still believe that? Tell me where the growth in commodities are.
Agriculture is one of the few places I know that's going to be the great industry of the next 20, 30 years. Just as we discussed last time, I mean, the fundamentals get better and better for agriculture. We have a shortage of farmers developing, much less a shortage of everything else. You know, these guys are going to get rich.
And we're looking at demand around the world continuing to increase, obviously, for food.
Demand goes up, inventories go down. It's the perfect storm.
So, you know, a lot of people talk about China as really being the big place for demand in terms of thirst for so many of these commodities. Is that where the business is, do you think? Is it elsewhere in the world? Where's this demand coming from?
Well, China's growing. There's no question about that. But lots of other parts of Vietnam, I mean, Brazil, lots of places are growing. China's the biggest, and that's a part of it. But it takes more than China.
And what are the most important commodities in your mind right now, based on that demand?
Maria, whatever I tell you is not going to be the best, I promise you. But agriculture is the place to be. I mean, you know, sugar's at a 28-year high right now. I own sugar. Would I buy more? No. But some of the things that are still depressed, that's where you should look.
How do I want to buy agriculture if I do want to go that route? Is this through an ETF, through an index?
I buy through an index. That's the way I do it. But if you know a lot about cotton and you're bullish on cotton, you can buy futures, you can buy ETFs on cotton. There are lots of ways to do it now.
What reverses this story? Is there anything out there that you're going to look at to say, okay, if this changes, I've got to change my whole investing theory when it comes to some of these commodities?
Well, I mean, if suddenly somebody discovers a gigantic oil field in Chicago or Tokyo or Berlin, then I'd have to think about it. But, or if somebody discovers a huge coal mine here in New York Stock Exchange, then maybe, yeah. But these things take a long, long time.
So the fundamentals in commodities just keep on improving, is what you're saying?
Nobody can get a loan for fertilizer, even though inventories of food are the lowest in decades. Nobody can get a loan to open a mine. The supply of all commodities continues to go down. It's one of the few places where the fundamentals continue to improve.
But what about valuations? Are some of these things getting too expensive?
Cotton is 70% below its all-time high. Sugar, even though it's been running up, it's at a 28-year high, is 70% below its all-time high. How could that be too expensive? It's 70% below where it was in 1974. That's not too expensive.
Okay, so are you looking at some of these nations like in Asia, China, etc., Brazil perhaps, as actually also investing in their equities because of the growth stories going on there, putting the demand story aside for commodities?
I haven't bought any stocks except in China in a couple of years. Maria, if the world economy gets better, commodities are going to lead because there are shortages. If the world economy does not get better, commodities are still going to be a good place because governments are printing a lot of money, and if the economy doesn't get better, they're going to print even more. Always throughout history, printing money has led to higher prices. Always. May not this time, but it always has.
What are the implications of that, Jim? We talked about the Federal Reserve and its actions a lot, the two of us. What are the implications of all of this? Do you worry about inflation down the road?
Of course, don't you? Now, you have your butler do your shopping, I know, so you don't know. But the rest of us, we know that prices are going up. Ask your butler. He'll tell you.
I'll do that.
The price of everything is going up. Now, your driver, when you ask your driver, he will tell you that energy prices are down, but everything else is up in price.
All right. You said, and I read this in your book to your daughters, A Gift to My Children, which was such a fantastic book, Jim. I'm so happy you wrote that book. You said, always be a contrarian.
Yes.
Tell me where you're a contrarian today.
Well, by not buying stocks, because everybody says that everything is okay, the world is great. Don't worry. So I know in my mind there are problems still to come. I know inflation's coming. If you ask Mr. Bernanke and everybody else in the world, they'll tell you there is no inflation. I know inflation's coming back. So most of the things I think, most people never like to think what I think.
How is the Fed going to handle this so-called exit strategy that everybody's talking about? This is the biggest thing on the agenda right now.
You know as well as I do, they're not going to handle it at all. And if they do, it's going to be bad. They're not going to get it right. I mean, the Australians just raised interest rates. Do you think the Federal Reserve is going to raise? Oh.
How do you raise rates when unemployment is close to 10%?
Well, because you're going to have inflation. You're going to have a serious problem. And
so
if
you
you're
think they should raise rates even if unemployment is above 10%?
No, of course they should. Because, look, the short-term pain is one thing. The long-term pain is going to be disastrous for you, me, and everybody watching your show. They need to start thinking ahead. They never have thought ahead. That's why we're in this predicament. If they don't do it, look, if they just raise interest rates by even 0.5%, that's not going to have much effect on unemployment, I assure you. They've got to start anticipating what's coming. Will they? Of course they won't. I mean,
so what does that mean?
If
they don't, then what happens then? What kind of implications does that have if they get this wrong?
What do you mean if? They are going to get it wrong. It's going to have higher interest rates. The dollar is going to be even worse shape than it is now. We're going to have higher inflation. It's going to be a huge mess.
Now, for a little while, and you got it right, actually, because for that little while the dollar was rallying, you bought the dollar.
Yeah, I mean, I have some dollars right more than I have
some dollars right now.
More than I had last time you and I spoke. But it just seems to me that there's so many bears, including me, that usually leads to a rally. Now, I'm a horrible trader. I shouldn't even be trying this because I always get it wrong. But it seems to me there's going to be a bit of a rally, and if there's not, then I'll just have to sell lower.
Again, you're a contrarian there. What other currency would you own, putting the dollar aside, if the dollar does go down further?
Well, it depends on how the others react, but at the moment, my play is the yen and the Swiss franc, but mainly the yen. I guess I would probably have to buy the euro if the dollar does continue to get weak. These are the places that I would probably put money. Maybe the Canadian dollar. These are the places where I would put new currency money if I had to.
What are you saying in terms of the economic landscape around the world? Any thoughts on where we are in this recovery? Everybody says, okay, sure, we're out of a recession, now we're in a recovery, but maybe we bump along the bottom for a little while. What are you thinking?
Some parts of the world economy are doing fine. I mean, if you're in agriculture or water treatment in the world, you don't know there's a recession. You could care less. If you're in infrastructure in Asia, you're booming. You don't care if Europe falls off the face of the earth. Some parts of the world economy are doing extremely well. If you sell to retailers in America, you may not be doing so well, but it just depends on the area of the economy.
So you think that the BRIC countries, you mentioned Brazil also,
I did not mention Russia, I did not mention India, and I'm not going to. Okay. I'm not optimistic.
So you're just talking really about China and Brazil right here.
Well, other countries. Vietnam is doing well. There are other countries that are doing well right now. Sri Lanka.
Where else are you investing, Jim?
Not buying stocks anywhere. I'm only buying commodities because, as I say, if we get better, commodities will lead. If we don't get better, I mean, look at gold. Gold's going through the roof. Sugar's going through the roof. These are places that are going to do well because people are printing money.
Would you buy the producers of some of the commodities? I mean, like, I don't want to, start making stock picks here, but if you're looking at like a Freeport-McMoRan, is that a way to play copper? If you're looking at
you get the right stocks, of course. That's a way to play copper. The studies show that you buy the commodities themselves unless you're an awfully good stock picker. So I'm buying the commodities themselves through an index. I'm not trying to play the stocks because you could have commodities going up and stocks going down. I mean, if the stock market goes down, the stocks are not going to do well, even if the commodities go up.
Well, this fourth quarter here, a lot of people are waiting on revenue growth. Would you short the stock market in the U.S. right here? No.
I'm not shorting the stock market.
You're just not going to go near it.
It's because they're printing so much money right now. I mean, the stock market could go up a lot. You would be losing. Look, the American stock market is up this year, but the dollar's down. So you really haven't made, you think you've made money, but the value of the dollar is going down, so what you think you've made, you haven't. It's an illusion.
Jim, always great to have you on the program. We so appreciate it. Thank you very much. Good to see you.